This conference will now be recorded.
Please let me know if I am not audible any of the time. Okay? Because I'll be in a different screen, so I will not be able to see the messages as well. Okay. I was telling, like, we went through the basic accounting terminologies in the previous class. So, before we start with Tally software, we will have to have few um, assumptions, concepts, and principles to start a company. Okay. So, basic assumption is basically we think like this is how a company must run. This is what our company must have. So accounting entity assumption is where you treat as if you remember yesterday I told you, when I say I take it as a business, right? The business is withdrawing money, the business is giving the capital. So similarly, I am here in, I mean, this assumption says the person, that is the proprietor, and the business must be two different things. You must not club your transactions and the business transactions together. So you as in business must be different, you as in person must be different transactions. So that is what the first assumption says. So the second assumption says where accounting period assumption. When I have there are different accounting financial years, right? So as in ours is April to March. Similarly, we have Jan to December, and then we have July to June, October to September. So these are different financial years. So we have to choose what when to close our books of accounts. Okay. What I want you to do is, I just want you to take the point, like take down accounting assumption, one accounting entity, two accounting period assumption. When we by end of the course, I'll be sending you all the notes. So you can just take down the points. Please take down. Next assumption is going concern assumption. That means we will always think, we will always want our company to run for a long term. Okay, we will always think what for next 5 years, what for next 10 years, what will not just tell okay today's tomorrow's. No, whenever we create a company, we always think that our company will run a longer period, and we assume things for that. Okay. Then you have money measurement assumption. So in this assumption, only the money is recorded. Okay, in the example you can see employee satisfaction is not expressed in monetary terms. That means the employee satisfaction is not money termed. So we will not record them. We will record only how much we have paid for them, or how much we have got the sales, how much we have done the purchase. That is what the amount is only recorded. No other things are included in this. Please take down. Next, once we are done with the assumptions, we'll take the concepts. Like, what are we to have in the, what is that we will have to list in the company. So concepts first says accrual concept, where you will have to record actual. Accrual is actual, where you will record both your income and your expense for whatever kind it is, whether it is loss, whether it is profit. We will record it as it is. That is the accrual concept. Then you have dual aspect, where which says both must have the benefits, that is the giver and the provider. That means you will take discount, you will give discount, so that particular concept you must have in the bookkeeping. Take down these concept. Same concept also, you can have only point. Yeah, no, till here I had explained. No, yeah, till here I had explained. 10, somewhere 5 6 slides. No, yeah, yeah, I had also finished this. Correct. I had also finished this. And nobody heard. I was explaining to myself. Very good. I'm audible now? Everyone, yes.
Yes, ma'am.
Yes, ma'am.
Yes, ma'am.
Only three of them are
Yes,
attending the
ma'am.
class.
Yes, ma'am.
Yes, ma'am.
Okay. So some of you are awake yet. Don't worry, from next class we'll have full practical. So you can be awake. Today you get the chance. Okay, next you have is the full disclosure. That means it says, the name itself says, whatever it is, all the financial records must be disclosed to everyone. I mean, whoever it is supposed to be, there must no be hidden things in the firm. Then historical cost. So which records, like for example, if you have purchased one machinery for 20,000, you will be writing 20,000 machinery only. So if it is depreciated or appreciated, you will not be giving that actual cost for today's current date. Okay, you will be giving the value in the books of record when it is purchased, only the actual value. That all depends when in the selling time. Okay, for now you will have the actual rates only. And then next one you have is verifiable and objective evidence concept. So evidence means proof. So you must have all the proof supported things for your financial transactions. For what? For your company. What are the documents evidence here? Your invoices, okay, your registrations, your all the bills of the purchase, sales, all your invoice are your evidence here in this concept. So you must have all of that in the records, it says. Take down. So any doubts, anyone, for assumption and concepts?
No, ma'am.
No, ma'am.
There's one more concept. So matching concept says this concept states that the revenue earned and the cost incurred to such revenue needed to belong to the same period. So for this is basically when you have these financial periods. So you need to match, like where whatever I am buying for this financial year, I will sell it in this financial year. So your concept must be that. So whatever you have put, that must be earned in that year only. Okay. Then revenue realization, as per this concept, revenue is considered to be income earned on the date. It is so until unless you don't receive the payment, it is not your revenue. It is not your income earned. So until unless you have received the payment, you have received the amount, you do not take that particular into account. This particular concept you will get to know when we are working on purchase sales transactions. You'll get to know what difference it makes in your accounts. It will show that you have sold 100, for example 100 chairs, but that 100 chairs amount will not be there until unless you receive them. Okay. Yeah, please take this. I have these people joining, leaving. What's happening? One second. I'm supposed to share my I am not audible.
Ma'am, you are audible.
Shruti, I'm audible now to you.
Yes, ma'am. Now you're audible.
Ma'am, you are not audible, ma'am.
I'm not audible.
No, ma'am.
Now I'm audible, Dhanush.
Yes, ma'am. Yes, ma'am.
Yeah. Okay. Then we'll take down these two concepts and then we'll go to the principles. Okay. Next, accounting principles. So principles in sense protocols. That means which must be done, which you must do is your um, principles. So it says cost benefit principle. The cost incurred for applying an accounting principle should be lesser than the profit desired for doing so. So whatever you put for the it must be lesser from whatever you are getting the profit of. So that is what, no, so obviously the cost price must be lesser than the selling price. So correct, cost price must be okay. Then you have materiality principle. As per all the information that is disclosed in the financial system should be the interested parties in. This is what our concept said in the beginning, right? So we must have where everything must be disclosed to. There must no be hidden things in the business. So whatever the concept is, we have already gone through. So the principles also says the same. Take down. Done. Next, you have consistency principle. So the word itself says you must always have a consistent financial year. Like if you are doing it April to March, then every time it must be um, April to March only. Okay. So your consistency must be compulsory in the business. So prudence, so it says uncertainty is involved in the operation of the business. So we spoke about bad debts and doubtful debts yesterday, right? So this is what it says. For those kind, we must anticipate and do in our profits. Okay, take that. Done. Okay, next you have you just read this. The single entry, double entry, one practically you must have, because we already did with journals in the previous class. So what is double entry system of bookkeeping? You have both credit and debit in there. So yes, everyone. Now, when you go to a small shop, okay, you buy some things from there. For example, if you're buying a kg, 2 kgs of rice, okay. So what do you ask him, and you want the bill for it, okay? You ask him for a bill, a small shop, a provision store, you think. So you asking for a bill, okay? What does that bill contains? Yes,
Price of the goods.
correct. So maybe you will write rice 2 kilos, 12.
Quantity.
Correct, quantity. You cannot expect more in that. That's just one. But that is also a bill because it has product and the price. So same thing, you've gone for a shop to buy your phone, a mobile phone. So you ask for a bill. What will be there in that bill?
Company name.
Okay,
Ma'am, invoice number.
number, okay. What else do you see? Further? Yes, Danush? I couldn't hear you. Yes, others?
CGST, IGST,
Okay, that is the tax. Hmm. Others?
Stamp or signature.
Okay. Yes, yes.
bill number or bill date,
Okay, bill number he told, bill date I can consider your answer. Hmm.
Name of the buyer.
Yes,
Mode of payment.
yes. What else? All are right. What else? Yuan,
model of the phone,
correct. So basically, product details you can say, no? Hmm. Jayashri,
Yes, ma'am.
answer me. What do you see in the invoice? So you will have guarantee, you'll have warranty, yes, you'll have all the details about the product. Okay. So your number, your address, they might ask. So all these things you will have about in that bill. So it is completely different from the bill given by the provision store person, right? So bill, that is what all details where you have is called the invoice. So invoice is nothing but a standardized bill. Okay, so bill is anything you receive, a document you receive towards the purchase, towards you give towards the sale, you receive towards the purchase. So that is what a bill is. So as I told you earlier, the bill also stands a very important role as the evidence. Take down. No, 1 second, 1 second. You can also take down this.
Hi, Sumuk.
to say hi in my class only then. You can't say him after the class. Told hi and left the class. Instead of telling bye, he told hi. What's Sumok? Your best friend, huh?
I don't know who is. Ma'am, I don't know who is he, ma'am.
Oh, okay. Yeah, please take down this and then take down this.
Ma'am, can you go back to the previous slide? Ma'am, you're not audible.
Ma'am, you're not audible.
Ma'am, can you put the previous slide, ma'am?
Which slide you want? The bill and invoice one? So we will have just on Tally, okay, some basic theories on it, theory based things, and then maybe today we can download the software, and tomorrow onwards we can have hands on with the software. So Tally is software. It's a ready-made software where we need to download it, purchase it, and use them. They are basically used accounting based softwares, okay, where all the accounting things. Now, what are the points you were doing in bookkeeping? What are the things you all have studied bookkeeping, right? You have done the bookkeeping part, like from the journal entry. So what do you do? First point is journal entry, then
Ledger
le-
account.
okay, ledger. So basically, journal means where you have the first entry, right? All the transaction, all kinds of transaction will be recorded in the journal entry, right? Then ledger means what? In particular, uh, uh, particular persons you will be creating the ledgers. So that is what is the ledger. So what we were doing is we create different persons ledgers like Mr. MN Trader, Mr. X, or cash account ledger. So these things ledgers we were creating. After next what? After ledgers,
Financial statements.
correct. We take the financial statements of each. So in case I have taken now one of the transaction you did is purchased goods from Mr. ABC, 8,000 rupees, and then he did the payment, and then we did the payment for ABC after a month, right? Then what you do, you go to that particular ledger account, ledger book, Mr. ABC ledger, and you put that amount when you do the payment, correct? Next, what are the financial reports? What are the reports you create?
Trading and P&L account, balance
P&L
sheet.
account, P&L account, balance account, balance account, and then what else you'll be doing? We will have the balance sheet, correct? Trial balance. We'll have the ratio analysis. We'll have the stock book, right? These are all the different kinds of book which we will have to be recording. We will have to record in the bookkeeping. All these things together will be done in Tally only by creating the journal entries. So basically in Tally we will only do the transactions. Automatically the ledgers are updated. We need to create the ledgers. Yes, we need to create the ledgers, but only in the initial part. And then all the ledgers are updated, all the trial balance is created, the reports are done, the stock summary is shown, the balance sheet is done, okay. You can see like you do today some transaction and you want to see that after 2 or 3 months. You just have to click and you can see what all you have done in that particular date. So all these kinds of all these kinds of seeing view with the reports or the transactions will be done in Tally in a click. Only thing you need to do is you create the transaction and automatically everything is being updated, so where which makes your work less, right? So this is what. One second. Okay, the Tally was created by Petronics Limited, then bought by Sham Sundar Goenka, okay, and renamed that as Tally in 1988. So basically, that headquarters is in Bangalore only, Electronic City. Okay. Then that's all. You just take these points.
Ma'am, I can't see your screen.
Oh, 1 second.
Ma'am, you're not audible.
Just take the points.
Sania, mute yourself.
Can you show the screen with the point?
Everyone, please keep quiet. Ma'am is not there.
Thanks, Dhanush. Take care of the class when I'm not there, and to mute people who are not even unmuted. So go to Google. You can see my screen, right? You can see the Google. Go to tallysolutions.com.
I sumo.
Remember, once you download, you should have the setup. Once the setup, only for one time it will be used. It will not be used again.
Ma'am, can you please tell which is the website?
Tallysolutions.com.
Keep quiet.
Dhanush, one more time you interrupt, I am deducting your marks. I am telling you. One time, one day, one twice is good. Not all the time.
Sorry, ma'am.
Yeah.
Ma'am, what are we supposed to say?
Sorry.
Ma'am, what are we supposed to select?
Wait. Actually, what is happening? My full screen is sharing, so the download I'm not able to show. So I stopped sharing. What you can do is you can just go to the download. A yellow color button is there. Up arrow is there. So you can just click on that and download 7.0.
Excuse me, ma'am.
Hmm? Tell me.
Ma'am, what if we don't have a laptop?